Good morning and happy Friday. It's Elysia, your Mortgage Millions mentor, and I'm so stoked. What a great way to start the day. If you guys haven't checked out Habits of Millionaires, you definitely want to. Meditation, exercise, great way to start the day. And today I'm going to talk to you about interest rates. I was doing my research exactly on what I wanted to talk with you about today. And it actually kind of took a different spin than I was anticipating, which I'm really excited to share with you guys. But first of all, if you're watching this live, put a 1 in the chat. And any questions you may have that you want me to answer, I'm happy to answer them. That's why we're all here together. And I'm going to give you a bonus. So if you DM me, and you know who this guy is, very appropriate for talking about interest rates. That's obviously me, a little younger. If you know who this guy is, DM me, and I'm going to have a special gift for you. Absolutely. Pretty stoked. So, interest rates. Okay. So, I wanted to talk with you about this with you today because it's interesting. I had one of my realtors reach out to me asking about a personal loan, so not for a client, for him. And he was asking me about Helocs. He wants to do a little remodeling. The price of lumber has come down. He wants to do a remodel on his primary residence, and he was asking me, should he do a HELOC? And I said, well, if you want to pay more for short-term rates than you do for long-term rates, totally, get a HELOC. And so, of course, I emailed that reply and then picked up the phone and called him because conversations are much better than email back and forth volley, for sure. And that got me thinking about what do we want to talk today about interest rates, okay? So, I mean, the bottom line is they are still predicting that long-term rates may be in the mid-5s by the summer, which would be great because that would help with summer home buying season for sure. But depending on what you're quoting and how you're quoting rates, you're almost already there. So for example, if you have a discount point on the front, you can be in the 5s on a 15-year fixed right now. All right, so look at what you're pricing. Because I could tell you interest rates can go up, interest rates can go down. I thought what was more important, because really no one has a crystal ball, and no one saw this coming, right? Not to the detriment that it's been to the industry, right? 22% of LOs left last year. Didn't come back, not coming back, which means less competition for you. So, a couple of strategies that I've been talking about and sharing with my realtors, I want to share with you so you can get on the same page and share them with your referral partners as well. So one of those is, yes, you want to buy now because you don't have the overbidding that buyers had this time last year even, right? Didn't really slow down until end of summer, and then definitely fall and winter for sure. So regardless of where rates are or where they're going, there's less competition for buyers right now, which means, and I hope you guys already know this, but I'm going to recap this just in case you forgot, right? If you're not talking about this in your daily conversations with your clients, with your realtors, with your strategic referral partners, then you're missing an opportunity to educate. And that's what always, to me, an educated consumer makes the best client, right? Because they'll come back to me because I'm the source, whether they're ready to buy now or not. But here's why they should be buying right now. Last year, okay, let's just say, for example, overbidding, okay? So if a house was, and I did this example, I was teaching a class of realtors, and I had them give me the numbers, right? Because I'm not saying anything. You guys tell me. So last year, $500,000 sales price, that house would probably end up selling for $550,000, okay? 50 grand over, 10% over, whether it appraised or not. So that was an extra 50 grand out of the buyer's pocket that they had to come up with. We are not in that situation right now. And I walk them through. If you guys want to see this, again, put a 1 in the chat and I'll do a video on exactly how to break out this math for you guys. So if they did that, they would spend an extra 50 grand. They would have a monthly payment at a lower rate. And I think the rates I used for that example at the time were like 4.875. And then if they bought now, right, they might be able to get that house for less than 500. But let's just say, worst case scenario, they still got it for 500. The realtors all agreed that that would make sense, right? Not 550, no overbidding, but they'd get it for 500 or less. And let's just assume worst case scenario, rates are even better now, but when I did this example, we used 7.5% as the rate for them, 20% down in both scenario, except for 20% down in the previous scenario was 100 grand plus their 50 that they had to overpay, okay? But now it's the 100 grand with 20% down, assuming. Now, their payment is actually a little bit higher than it would have been. But if you look at the 50 grand that they would have overpaid last year versus this year, they saved so much money. It's like a 10-year break even. It was ridiculous. So, one, you want to be aware of what a great opportunity is to buy right now. But don't take my word for it, right? What I do is I follow the experts who know exactly what they're doing, right? So if you consider me an expert, great. That's what I have to say. In addition, where do I get my information? I ask a ton of people, lots of questions all the time. Yesterday, I was on a phone call for an hour trying to learn more about different parts of the economy, different parts of the country, how I can help you guys more. So I have a ton of ideas as well. But the thing I want to say about that is, again, don't take my word for it. Who's buying right now? Warren Buffett, Bill Gates, and Elon Musk. All three of them are buying real estate right now. They have pretty successful track records of success. I'm going to pay attention. And that's what I'm going to tell my clients. So, demographically, there is still a housing shortage. If you look at the numbers, technically we are still in a housing shortage. So, that's who's buying now. Warren Buffett, Elon Musk, Bill Gates. So, what are they all doing? They're buying now because they can get a better deal now, because if rates drop to 5.5 in the summer, there's going to be another buying frenzy. We're not that far away from that, right? Wall Street Journal prime rate is at 8%. And this is when I go back to what I started with. Inverse, right? Short-term rates, 8%. So if you want a HELOC, if you have perfect credit, you might get some temporary 3-month thing in the 4s. But the reality is, HELOCs are all based on prime plus, right? If you have perfect credit and extra equity after the HELOC, you might get prime plus 0. So best case scenario, your HELOC's going to be at 8%. Worst case scenario, not perfect credit, maybe not as much equity as you think you have in your home, 10, 11, 12%. Why would you do that? You can still get a long-term rate, like I just said, right? 15-year fix, point on the front, in the 5s. Or, depending on where your pricing is, you could be in the 6s with the point on the front as well for primary. So something to think about, okay? I'm always trying to figure out how I can help you guys sell sell more and serve your clients, really. It's not even about selling. And although actually a true salesperson does the needs analysis on how they can best help their clients. So, as inflation is eroding cash buying power, the best thing you can do is put it in an appreciating asset that is positively impacted by inflation, such as real estate, right? You can't get rich being a renter. And let me give you some stats in addition to this. Kiplinger did a study. The top 1% of wealth in America, okay, you have to have $10.8 million net, okay? And that's your assets minus your liabilities, right? So assets are cash, real estate, equities, things like that. minus your liabilities. So minus your car loan if you have one, minus your mortgage if you have one on primary or investment property. Okay? So top 1% in the country has a net worth of 10.8 million. Top 2%, 2.5 million. Not that hard to get there. Top 5% of wealth in America has a net worth of 1 million. The top 10%, 800,000. And the top 50%, 500,000. Why do I share that with you? Because 2/3 of all net worth comes from home equity. You're not getting home equity anyplace else except for real estate. So again, why do I mention this? Because I'm always trying to think of strategies to help you guys exponentially move forward. So knowing that you can't get rich being a renter, who would be a good strategic referral partner for you? Financial planners, CPAs. Something to think about. Because if they truly are interested in serving their client, you can build a win-win relationship with them so you both can help the mutual client. So I want to share that with you. And speaking of that, if you guys have any interest in me making this a Financial Friday update, because I'm going to have a couple tips for you in a minute, go ahead and put finance in the comments below, and I can give you guys some more finance hacks as well. Remember, officially, this is not financial advice, but I have made millions on real estate, and that's how I was able to retire the first time. So if you'd like that information, just put finance in the comments below anytime today, and I can try and add that. So as a little teaser, I'm going to ask you guys where you can get a return of 6.89% right now. Anybody know? 6.89%. Government backed, as secure as it's going to get, 6.89%. The most you can put in is 10 grand a year, unless you have a tax refund that you can apply towards that. Again, if you want to know what that is, secure, 6.89%. Put finance below. And with that, I hope you guys have found this super helpful. I hope you use this information that I started with to go out and crush your day. And as always, cheers to your success. See you soon.